I want to talk about concentration for a moment. One of the things that you spoke about in our first interview, which is episode 23 again, and we'll link to it in the show notes so people can listen to that as well, was concentration and this idea of having a fund that could be more concentrated. You gave, I think, a number at the time of, and I don't think there was any positions at the time that were this large, but that you would be comfortable with a position maybe going to 15 to 20%. And so I just wanted to kind of talk about concentration at a high level. And one, I guess the two questions would be, has your thinking changed at all? And how do you guys approach concentration today, if any differently?
Thinking has evolved quite a bit on this topic. Thanks for bringing this one up again. And this is part of being an emerging fund manager. How much do you know at the outset versus what you learn along the way? And I'll actually step back and talk for a moment here about the transition from being an equity analyst into a portfolio manager. It's not an immediate process. And when you're an analyst that's making recommendations, you're typically only really into 3 or 4 at the most, given opportunities at a time. And the way in which my own personal investments have been managed, I personally never held more than 3 or 4 securities at a time. And that type of history is what drove that sort of level of over concentration. It was one of the things we experimented with early on in our fund. We're going to talk more about this as we get into it later, but one of the biggest things we added was a quantitative analyst to our team. And this is someone that is much less stubborn about any single security, but does a tremendous amount of work comparing securities in the market and understanding volatility and risk profiles of different investments. And one of the studies that we did was looking at our universe of companies that we've loved and going back over the last 20 years and testing different weighting strategies. Equal weighting, market cap weighting, valuation multiple rating, conviction weighting. And one of the interesting things that we found was that all of the different weighting methodologies kind of got you to the same ending point with different volatility characteristics along the way. So this was a huge eye opener for us because it meant that we didn't have to plow 15 or 20% of the fund into a single security. And it meant that over time, we could sort of push ourselves not to be purely equal weighted, but to put bands on the conviction levels. And so we're, for the most part, keeping our largest positions a bit under 10%, but we're also pushing up the floor and not owning less than 1 to 1.5% of anything.
Yeah, just on that note, previously, did you hold positions in very small amounts? And I guess the reason I'm curious about that is the idea of having a floor seems really interesting because, in investing, oftentimes you'll hear investors talk about a toe hold. And there's no real, I don't know, I've never heard a quantitative answer around how big a toe hold position is, but you'll go and look at a lot of funds and you'll see positions that are 0.1, 0.05, 0.05, a very, very, very small number. Talk a little bit about how you got to that floor and maybe what the floor was before, if that was different.
Yeah, the floor is even smaller before. Value Act had a good answer on this, which is, we use our smallest positions as a research trigger. So if someone cares enough about something that they keep bringing it up, we throw it in the fund, pretty darn quickly as one of our smallest positions, and that puts a lot of pressure on the research team to justify the existence of that position and resultingly try to argue that it ought to be a bigger position in the portfolio. Because unless something is in the portfolio, really no one around the table takes it very seriously. So that floor has walked up. I mean, we used to have a handful of 50 basis point positions was our smallest example. And the truth is that those positions don't drive a fund. And I would say that we manage ourselves more towards the 25 security max. Anytime we start drifting more than 25 securities, we find that the research and conviction gets stretched too thinly. But these have all been factors in driving the top and bottom sizing in the portfolio.
I'm going to ask one more question on that, and then I'll move on. I want to talk about the state of active management and ETFs. I guess flipping to the other side of the portfolio, you talked about 25 max positions. Another stat that a lot of investors will talk about is generally their top 10 positions and how much weight in the fund those have. What are your thoughts? What is your approach to managing your highest conviction positions? And are those 10? Are those 15? Does the number move around? And then what's that total weight look like?
Sure. Well, there's one requirement in running a 40s Act fund, which is, your larger than 5% positions can't make up more than 50% of the fund. And so what that means for us is concentrating into our highest conviction ideas means that we have about 6 securities that make up the top 50% of the fund. That number may vary from 6 to 8, depending on how much we're moving it. But I think it's critical. I mentioned the active share component earlier. It is incredibly difficult to get your active share above 60, 70%. Anything below 70%, you're closet indexing. So as a result, it is very challenging to get to that level of active share without having that level of concentration in your top 6 to 8 positions. So we view that as table stakes for getting to be a competitive active fund.